Welcome to this video on the fallout of Trump's tariff policy. Donald Trump wants to raise US tariffs back to the levels of the 1930s. For 80% of the German exports to the US, the tariff rate will rise by a massive 20 percentage points. It remains to be seen whether pharmaceutical and chemical products will be spared from the higher tariffs in the long run. The European Union has announced a decisive response to Trump's tariff increases. But the European Union will actually be negotiating with the US behind the scenes. The EU could offer tariff reductions or simplified product standards. In the end, Trump is likely to lower the tariffs somewhat. If, contrary to expectations, Trump does not make any concessions, the European Union would introduce large-scale counter tariffs on US goods. The European Union could also target the services of large US tech companies. In the end, Trump is unlikely to increase the tariffs quite as much as announced on Wednesday evening. German GDP is then likely to fall by just under 0.5% over 2 years. Regarding 2025, we had already lowered our German growth forecast from 0.2% to 0.0% 3 weeks ago. In the meantime, doubts came up as to whether the ECB would really cut its deposit rate twice to 2.0% by the middle of the year. But Trump's tariffs pose an economic risk. In addition, inflation could be somewhat lower if countries such as China try to sell more of its goods in the Eurozone that they can no longer sell in the US. All in all, the ECB is likely to cut its rates by 25 basis points at each of the next 2 meetings. In the US, Trump's tariffs are likely to increase inflation by at least 1 percentage point. This is a problem for the Fed. Unlike the futures markets, we do not expect the Fed to cut its rates already in the summer. This forecast is based on the assumption that higher tariffs will lower US GDP growth, but that a recession will be avoided due to the high underlying pace of the US economy.